You know, Warren Buffett said Bitcoin's a rat poison. And you know what? He's right. And guess what? Warren is the rat.
Now, if somebody calls that a store of value, I mean, I think they're delusionary.
I think it went up another $7,000 in the last couple of hours.
Well, I think it's going a lot higher.
They like to speculate. They like to gamble.
Grandson got his grandma to get into the game of Bitcoin. She thought she was just buying a piece of a big coin.
What's up, Graham? It's Guys here, and I'm sure you're starting to see all these recommendations of the best cryptocurrencies to buy during the recent bull market. After all, if you bought Bitcoin earlier this year, you'd be up 140%. Dogecoin is up 350%, and Peanut the Squirrel coin gained about 1,500% in a week. I don't get that one. Anyway, even though a few cherry-picked examples did exceptionally well over these last few years, that got me thinking, what if there was a way to determine which cryptocurrencies had the highest returns? How much would you have made had you bought and not sold? Can you identify which cryptocurrencies are eventually going to be worth nothing? And finally, is there a way to use this information to potentially make or save yourself a lot of money? Well, even though unfortunately I can't predict the future, there is one analysis that dates back to 2012 to find the commonalities that gave you the best chance at making money. Honestly, this information is so good that we have to talk about what they found, because I have a feeling this could be, as they say, one of the greatest wealth transfers to ever happen in history. Although before we start, as usual, if you appreciate the information and just the facts, it would mean a lot to me if you hit the like button and subscribed. I'm also going to be linking the Market Sentiment newsletter down below in the description because they were kind enough to share all of this research with me, and I highly recommend you follow along as well. So thanks so much, and also a big thank you to Surfshark for sponsoring this video, but more on that later. Alright, so on the surface, let's get this out of the way. We have a money problem. Despite the stock market hitting record highs and inflation cooling down to almost 2%, the average American is getting poorer each and every year. Like sure, we've seen an average 10% annualized return in the S&P 500 since the 1920s, but we've also printed 10% more money every year during that same time. Well, in many ways, that's what people believe cryptocurrency, or largely Bitcoin, solves. After all, Bitcoin has been one of the asset classes to have outperformed the money supply by a wide margin. How? Well, after making its debut in 2009 after the Great Financial Crisis, it slowly adopted mainstream popularity, having now become the best performing asset of the last 2 decades, rising more than 18,000% since 2015. To put into perspective how insane this is, that's a compound annual growth rate of more than 100%, or 10 times higher than that of the S&P 500. And the premise is that there's only ever going to be 21 million Bitcoins in existence, and that's it. But even though Bitcoin has gone up over 20 million% since its inception, it's also not uncommon for it to drop 50 to 90% before eventually moving back even higher. So what does this mean for you watching, and how could you use this information to make money? Well, here's what you've been waiting for: the secret of cryptocurrency. Even though we've started hearing stories of traders turning $17 into $3 million by investing in Peanut coin, the reality is that unless you get insanely lucky, your chance at picking something that even makes any money is incredibly slim. But there are some things that you could do to at least help tilt the odds in your favor. Like, just consider this. As the Market Sentiment blog points out, there are currently over 4,300 publicly traded companies in the United States. But there are more than 15,000 different cryptocurrencies. And of the more than 40,000 coins that traded in an exchange at least once in the last 10 years, only 38% are still alive. That means right off the bat, forget even making a profit. The chance of a random coin surviving for more than a few years is 1 in 3. And oddly enough, this is eerily similar to stocks. I know it sounds hard to believe, but an Arizona State University professor analyzed over 26,000 stocks since 1926, and what he found was unbelievable. He discovered that the average stock trades for only about 7 years and loses money, even with dividends reinvested. As it turns out, the most common return for an individual stock over its lifetime was a loss of 100%, and only 48% of stocks delivered any positive returns whatsoever. So from this data, only 4% of stocks actually made more money than a 1-month treasury bill, and the other 96% of stocks that didn't go to zero simply kept pace with inflation. Initially, I never thought there would be this many similarities between stocks and cryptocurrency, but they're nearly identical. Like, when it comes to crypto, it's found that a few winners contribute massively to the overall market, and in this case, 60% was contributed by Bitcoin. In addition to that, the top 10 coins contribute to a whopping 89% of the total crypto market, which for comparison, the top 10 companies of the S&P 500 only contribute around 30%. But if cryptocurrencies are beginning to mirror that of the stock market, does this mean it's better to invest all of your money all at once or invest slowly on a regular basis over the next year or so? Again, here's where things take a bit of a turn that was honestly unexpected. Vanguard found that lump sum investing outperformed dollar cost averaging 69% of the time. And oddly enough, the same applies to Bitcoin. Since 2013, if you invested a lump sum into Bitcoin instead of dollar cost averaging, you would have come out on top 66% of the time. As an example of this, just take a look at what happened in 2018 and 2022. If you dollar cost averaged during that time, you would have had a much lower drawdown than someone who invested a lump sum at the beginning of the year. But if you had invested all of your money at the beginning of a bull run, like in 2017, you would have outperformed by over 700%. This shows that statistically, if you have a holding period of longer than 12 months, you're historically better off just investing all at once than spreading it across evenly throughout the year. But since this only applies to Bitcoin, what about other cryptocurrencies, especially since they seem to make millionaires overnight? Well, before we go into that, it's important to mention that most investors will spend a lot of time reviewing every purchase, evaluating its potential upside, and then trying to make as much money as possible. But even though we'll spend a lifetime working to improve our finances, save money, and budget, it's shocking that most people spend no time whatsoever making sure their data is secure and protected. As an example of this, I've been traveling a lot to film guests for my podcast on the Iced Coffee Hour, and I've seen horror stories of people connecting to Wi-Fi networks where hackers could see their bank account information, browsing history, and even keystrokes. That's why it's so important to keep your online identity safe, and our sponsor, Surfshark VPN, is able to help you do exactly that. For those unaware, a VPN helps protect your online privacy by encrypting your internet connection, masking your IP address and personal information, and preventing hackers from identifying your city, country, and download history. Essentially, a VPN is able to swap the real location of your device with a new one, giving you the ability to virtually travel around the globe. Not to mention, it's really useful if you travel outside of the country and want to have access to features that would otherwise be unavailable. For instance, I recently visited Japan, and I was able to change my location back to the United States so that everything worked as normal. Or I guess you could also do this in reverse. Like, did you know you could watch the entire Harry Potter series from Netflix in the United Kingdom? Just switch your location, which takes you a few seconds, and you're good to go. In addition to that, Surfshark's Clean Web feature also blocks ads, trackers, malware, and phishing attempts, allowing you to surf the web safely. Plus, they don't track, store, or monitor what you do online. This means there's no connection or activity logs whatsoever, so you could rest assured that your activity is private. So if you're interested, check out surfshark.com/Graham and use the code Graham at checkout for an extra 4 months at an unbeatable price. There's also a 30-day money-back guarantee, so there's no risk to try it out and see what you think. Again, I'm a firm believer in browsing the internet securely, so if you're interested, the link is down below at surfshark.com/Graham with the code Graham at checkout. Thank you so much, and now let's get back to the video. Alright, so in terms of how Bitcoin compares to the overall cryptocurrency market, I have a feeling you're going to want to see this. Here's how the top 10 cryptocurrencies have changed over the last 10 years. And as you could see, really one thing has been clear. The number one pick consistently has been Bitcoin. Now, even though a lot has come and gone, similar to the S&P 500 over the decades, is there an investing strategy that one could utilize to consistently come out ahead? Well, that's what brings me to this website, top10cryptofund.com, where they've tracked the top 10 cryptocurrencies on a regular basis since January 2018, and then compared that to the overall index of cryptocurrency to see exactly how and where you could make as much money as possible. And this is what I found very surprising. The premise of this is that on January 1st of every single year, this person buys $1,000 worth of the top 10 coins split evenly with $100 each, and then they compare that to the overall market to see which does better. And this year, despite Bitcoin doing incredibly well, as of November 1st, this entire portfolio of the top 10 coins is only up 3% from the beginning of the year, compared to 6% within the entire crypto market. How? Well, remember, until November 4th, much of the market, besides Bitcoin, was rather stagnant, having barely increased off its prices from the beginning of the year. And now that the entire cryptocurrency ecosystem has seen a resurgence, most of those losses have turned into rather spectacular gains, with much of that having happened over the last 2 weeks. That, of course, is all going to be reported on the next update on December 1st. On top of that, if you include this data going all the way back to 2018, having consistently invested invested $1,000 each year into the top 10 coins, that'll equate to a total value of $20,829 on November 1st, all from an initial investment of $7,000. Compare that to the S&P 500, which is only worth $11,624 during that same time frame, and you could see that despite a lot more volatility, you would have made a lot more money. Of course, keep in mind that all of this is based on past results, which may or may not continue in the future, and a large part of how much you end up making from all of this is largely due to your luck timing the market. For instance, in 2017, your cryptocurrency investments would have resulted in an 84% loss by the end of the year, with a total loss as high as 94%. From there, 2019 didn't do that much better either. During a time where the S&P 500 saw a 29% return, the cryptocurrency portfolio made just 1.74%. That's it. Despite Bitcoin seeing an 89% increase that year, almost every other cryptocurrency lost value with the exception of Bitcoin Cash and Litecoin, leading our cryptocurrency portfolio to have underperformed a savings account. As it turns out, things didn't really turn around until 2020 and 2021, which was largely a bull market for cryptocurrency. And those gains overshadowed the rest of the market if you continued buying in consistently. But this is a prime example of it. Even though you can make a lot of money, you could also lose a lot of money very quickly. Although in terms of why Bitcoin and cryptocurrency has gone up so much lately, a lot of it has to do with less regulation. In this case, the community is rather bullish on a new proposal that would support rather than criminalize cryptocurrency by creating what's called a reserve fund. This was initiated by the Senator Cynthia Lumis that would make the United States the largest government Bitcoin holder, equating to about 5% of the network's total supply, similar to the country's stake in global gold reserves. Even though this was previously stalled in Congress, now that Republicans control both the House and the Senate, and with Donald Trump publicly endorsing Bitcoin as a method of innovation, it's rumored that there could now be a chance for this to pass, making it one of the primary goals of the first few months in office. This isn't just a Republican bill either. Democrats have also been on record as saying that we want to make sure that we have the openness to having Bitcoin as a part of the Federal Reserve and as a reserve asset because of its potential for appreciation and because of its potential to allow America to set the financial standards. After all, this has worked well so far for El Salvador, whose holdings have risen past $1 billion. The same also applies to Tesla, who also holds a similar amount, and dozens of other publicly traded companies that use a portion as their reserves. So if the United States is able to accumulate a large amount of Bitcoin, similar to having the reserve currency of the US dollar, this could be a way of maintaining global financial dominance, especially since Bitcoin is seen as a worldwide store of value. Not to mention, as the Robinhood founder said, there's widespread optimism that the Trump administration, which has stated that they wish to embrace cryptocurrencies and make America the center of cryptocurrency innovation worldwide, is going to have a much more forward-looking policy in this new industry. All of this has contributed to a very optimistic belief that this is just the very beginning, and the price from here could be incredible, even being referred to as the greatest transfer of wealth in history. Although despite me speaking directly with Michael Saylor for a few hours, being bullish on the blockchain network, and being a long-term believer of Bitcoin over the next 10 to 20 years, I do have a warning for everybody watching. Since there are so many similarities between cryptocurrencies and penny stocks, if you don't want to lose money, just keep a few of these things in mind. One, research has shown that the biggest enemy to your portfolio isn't Gary Gensler, it's overconfidence. A study published in 2017 found that when investors are successful, they disproportionately attribute their success to ability rather than luck, which leads them to making even riskier investments that eventually lose. Not only that, but investors are more likely to downplay their losses and mentally exaggerate their wins, leading them to want to keep going. Two, the hardest barrier for an investor to overcome is emotion. Like at first, you're hopeful that you're going to make a lot of money. You see the potential. You hear about the people making life-changing money with $100, and you think to yourself, well, if they could do it, I could do it too. But unfortunately, that is where greed sets in. Let's go a little heavier so you make more money. Everything is going up, so it'll go up even more. If I don't get in right now, I'm gonna lose the opportunity. And then you're hit with fear. It's the fear of missing out on more profit that keeps you in longer than you should. And then from there, it's the fear of loss that is so much more powerful than just about anything else that you could feel. And then finally, you have regret. What if you invested in this versus that? What if you stayed in a little bit longer? What if you missed this opportunity? I don't want to look back and regret that. All four of those emotions realistically will impact your performance as an investor if you don't get them handled. After that though, 3, the less money that you have, the more likely you are to make riskier investments to want to catch up. For instance, just consider this. If you have $5,000 invested and you're able to make a 30% return over a year, that's $1,500 before taxes for all the work you had to spend on Twitter, YouTube, and Discord servers, which is probably less than you would have made just working overtime at your existing job instead. This might cause people with less money to make riskier investments in pursuit of a 10,000% return, which means most likely they're probably going to lose money in the process. And finally, 4, beware of fast, quick, easy profit. I've been actively watching Bitcoin since late 2016, and I have seen so many times people invest and make a substantial amount of money, only to lose practically all of it when it comes crashing down. The only investors that I have seen consistently actually make a profit have been the ones that just buy Bitcoin, hold, and do nothing. I know it doesn't sound exciting, but it's true. The boring investors that don't trade, don't speculate, and just buy in an amount that they're willing to lose end up doing the best long term. Lastly, let me just say this. When it comes to 99.9% of cryptocurrency, it's the wild, wild west. Anything could happen, and there's a solid chance that you could lose a lot of money. Even with Bitcoin, some of these price targets, at best, are educated guesses, and at worst, it's pure delusion. Sure, there are a lot of positive signals. I'm highly bullish for the future, and it could one day trade for $1 million a coin, but there's also a chance it won't anytime soon, and that needs to be considered, just so you don't buy in more than you're willing to risk. At the end of the day, I don't mean for this type of video to discourage anyone from participating, but it is a reminder that this sort of investment is inherently risky, and by better understanding why some people lose so much money, you could better protect your own investments to come out ahead. There are just so many curveballs that could happen on a moment's notice, and that needs to be taken into consideration, at least before you spec out your Lambo by 2030. I also believe there's no harm in taking some profits if you're overly invested in a single asset class that's very volatile, or if you're up a life-changing amount of money. There's no reason to keep risking it. I just think it's a good idea to hear out as many different opinions as possible, hear as many different perspectives as you can, and then come to your own conclusion. In my case, I tend to believe this Bloomberg article, which argues that Bitcoin can replace a small part of your portfolio without increasing volatility and risk. For example, just a 1% allocation to Bitcoin has so far increased your returns by 1.3% with nearly identical volatility as bonds, which is incredible. So no, I'm not against Bitcoin. If anything, I'm actually really for it, but I just want you to be a safe, long-term, stable investor that doesn't lose money and is actually profitable. That's why you should only invest what you're willing to lose, take it slow, hold long-term, and no matter what, hit the like button and subscribe if you haven't done that already. So thanks so much, and again, I'm gonna link to the Market Sentiment newsletter down below in the description. I highly recommend you go and follow them. They've been giving me some incredible research lately, and I highly recommend you follow along because I'm not gonna be able to make videos on everything. So again, the link is down below in the description. Thank you so much, and until next time.